Hello, my name's Stanley. Today I'm working with a specific goal of earning $2,000 for this session with an initial balance of just $86. I'll do this using a strategy that best shows the probability of movement. It doesn't give unnecessary entries and doesn't force you to rush. And in this video you'll see the entire process, from waiting for a signal to the logic of entry. And of course, I'd appreciate it if you subscribe to the channel and liked this video. So, let's get started. First, let's prepare the tools for work. I'm setting classic candles and the time frame is 30 seconds. Let's go to the Indicators tab and select the Arun and the Williams. Let's configure the Arun first. Set the period to 5. Go to Style. Make the upline green, width 2. And let's set the width of the downline to 2 and save. Let's configure the Williams. Set the period to 15. Go to Style. Set the width of the -20 and -80 lines to 2 and move the opacity to the right. Let's set the width of the main line to 2 and save. So, the indicators are ready to go, and if you are trading on your phone, set it up the same way. From the very first minutes, the market gives a clear signal for continued growth. Expiration is 2 minutes, and I'm opening a long trade for $86. Let me tell you how I acted on this strategy and what exactly I paid attention to at the moment. First, we look at the Arun indicator. The moment the green line confidently crosses the red line from bottom to top, the market begins to change its state. This is a good sign that the upward movement is just forming and the price is gradually coming out of the previous phase and gaining strength. And next, we must check the Williams. Its turquoise line also crosses the red line from bottom to top, confirming that the momentum is indeed supported and the upward movement is not accidental. The chart begins to behave more confidently, the candles become directional, and the growth structure gradually takes shape. Calm execution. I'm locking in $79 in profit and moving on. If you care more about practice than theory, then join my Telegram channel. Every day I provide market scenarios, show results, and help participants navigate the moment. You can work manually or enable auto-copying. Inside there are risk management tools and strategies outside of YouTube. The format is free, but the group is small, so please write to me if you want to work in this mode. Then a bias towards buyers appears on the chart. Expiration is 2 minutes and I'm opening a short trade for $165. The price rapidly gains speed and shoots up, but this movement looks too intense. The growth continues without pauses or respites. The candles stretch out and become noticeably longer than usual, which often indicates an overheated momentum. At such moments, the market seems to be running too fast and begins to lose its balance. After that, the first weakness appears. The price stops holding its height, the momentum gradually fades away, and the market begins to prepare for a pullback. The reversal doesn't happen abruptly, but the direction changes quite clearly and consistently. And as a result, the movement smoothly goes down. The correction develops after a strong impulse, the structure changes, and the downward movement begins to take shape, confirming that the market has entered a new phase. Let's see. And that's a good reaction. There's another $151 in profit. The pace remains the same. Next, I decide to show an example of an imperfect entry. With an expiration of 2 minutes, I'm opening a short trade for $600. The chart now shows a strong impulse, but the situation looks ambiguous. On the one hand, the movement is quite strong and there's a feeling that the growth may continue. The price has moved confidently without any obvious signs of weakness, and the market is not yet giving a clear signal to stop. On the other hand, it's possible that the main energy has already been spent on this surge. The momentum could be the final one, after which the market will take a break or begin to gradually shift downward. At such moments, the direction is not entirely clear, and it's definitely not worth rushing to conclusions. The situation remains open for now. It's better to simply observe the development of events and see how the market behaves before making any conclusions. I recorded the loss, it happens, but I calmly accept the result and move on to the next situation. The final entry is formed as cleanly as possible. With the timer set to 2 minutes, I'm opening a short trade for $1,643. The price hits the resistance zone and immediately begins to lose momentum. The growth doesn't continue, the momentum weakens noticeably, and the market stops pushing through new levels. This is the first signal that the upward movement is coming to an end. And next, reversal candles appear on the chart. They form neatly without sharp spikes, but clearly show the change in sentiment. Growth slows down, the structure begins to break down, and the price gradually shifts lower. At this moment, the indicators fully support what's happening. They point to a decline, confirming that the initiative is shifting to sellers. The downward movement is developing calmly and in a controlled manner, and the market is increasingly confidently heading in a downward direction. Let's see. A strong finish. I locked in $1,512 in profit, bringing my balance to $3,156. So, let's sum up the results. It was a very good session. My balance grew from $86 to $3,156. And if you have any questions about the methodology itself or want to understand it more deeply, please don't hesitate to write to me on Telegram. I'll be happy to help you. Well, thank you very much for watching, liking and subscribing to the channel. See you soon and happy trading!